Yeah. Hello and welcome to another podcast from the finance broker side. Today we've got two of our lovely relationship managers from Thinktank. Let me introduce Dave. Dave is a commercial relationship manager.
Thank you, Griff. Yes.
Welcome.
Thank you. Thank you.
And we've got Matt here. Matt looks after all our residential loans with Thinktank.
That's right.
So welcome, Matt.
Thank you.
So thought we'll take a chance to address our self-employed applicants and lots of clients in that range. Typically, self-employed clients would go to a normal bank where they need to submit maybe 2 years of financial returns for their company, 2 years for the trust, 2 years for the personal, along with notice of assessment. Not everybody is up to date with their taxes, may have some requirements that they still need to look after. I believe
for your firstborn child as well sometimes, good.
Yes, it is.
And I think that's where we play, right? I mean, if effectively like Thinktank, we just to give you some background about us, we started about 17 years ago. Started by ex-bankers from big banks who thought there was a niche to be to play in for self-employed clients, and that's where Thinktank is a bit different. Our main core client group is self-employed. I think 95% of what you do is self-employed as well.
Yep.
And being a commercial lender, because we were pretty much a commercial lender for almost 12 years of that 17, and in the last 5 years coming to resi space.
Yep.
So our policies are very commercial. So even with resi, with Matt, all of our policies still cater to that self-employed client base.
Right. So let's start with maybe for the commercial. Let's tell our viewers how we are different to what the big banks or the normal banks ask in terms of documentation.
So to give you an idea, we have like separate kind of ways of assessing a deal. The one that we are very popular for is called mid-doc product.
Yeah.
And all we are after is the customer self-declaring their income and supported by either their last 2 BASs or an accountant's letter or last 6 months of bank statements.
Oh, wonderful. So activity statements are good for you.
Definitely.
Okay. Yep.
So so it's all about simplifying the client's needs and doing the lending based on that, because a lot of trading businesses are most cases behind their financials. So and especially with our banking partners, and we all come from big banks as well. So there are guidelines that they also have to make. So it's not that they're trying to be difficult. There are regulations around it. As we are not a non-ADI or a non-deposit taking institute, that's where there is a bit more flexibility at us.
Yeah, I'd certainly add to that, Dev. We see the same sort of clients in the self-employed space on the resi front. There's any number of reasons a client would use a mid-doc product. Probably some of the key ones I can think off the top of my head are a new business. So the ABN hasn't been active for 2 years. So very hard to give the bank 2 years financials, 2 years tax returns when the business was incepted 18 months ago, right?
Yeah.
So we play very well in that short-term ABN space, and also where there's been a change of entity. So they may have been a sole trader and now the accountant's recommended they've gone to a company or a different trading trust structure, something like that. So there could be other things that the accountant's doing with their tax. Self-employed people have some flexibility around what they declare on their financials. There may be tax minimisation strategies. There may be write-offs that the banks won't accept. So for the self-employed clients out there who are just not quite meeting servicing with the major banks for any particular reason, Thinktank's a really good home for you. There is a raft of lenders that play in our space. Yeah. If you're thinking about where Thinktank sits in the lending landscape, it's alongside the likes of Latrobe, Liberty, RedZ, Resimac, Pepper Money, that real non-bank space.
Correct. So in terms of security in the resi space, is it only freestanding homes or do you have accept apartments as well?
We do accept apartments. We've got 3 golden rules with apartments, the Holy Trinity. Minimum 50 square metres, so including balconies, nothing over 10 stories and nothing in a city. So that comes down to our funders' appetite. Those types of securities are perceived to be a little bit higher risk, but always ask your broker. If you're looking to purchase an apartment, we'll always tell you very quickly on if it's a security that we'll accept or not.
And what we also have now is on our website there's a product selector or a postcode selector, which will pretty much tell you what we can and can't do very quickly as well. So that's a new tool and that's really handy.
Okay, and I assume the maximum lending will be 80% of property value?
All our products, commercial, SMSF and residential, our max LVR is 80%.
Yeah.
So we do have that little bit of protection. And loan amount from the resi side, a max lend of 2.5 million loan amount. I think, Deb, you can go a little bit higher than
I
that.
can go a bit higher, so we can now go up to about $6 million. I'll talk a bit about GST funding as well when we come to that portion about that we can go above the 80 as well if really required.
Yep. So if let's say if a client already has a property but he wants to get some equity out of that property to buy a new property, would you structure them according to that?
That's the flavour of the month at the moment, Girish. So,
Yep. Okay. Yeah.
we are dealing with a lot of self-employed clients who have been able to get a lot of equity in their owner-occupied home, potentially an investment home
Yeah.
already, and they're looking to leverage that equity. So we're very flexible around cash out. We'll do unlimited cash out for stated purpose. So if we had a security that was worth potentially 4 or 5 mil, and it was unencumbered, we could take a loan against that for 2.5 mil cash out. And that could be for personal, business, investment use. Very, very flexible around cash out, much more than the likes of the majors.
Yeah,
who
oh,
do
definitely.
those types of
And this is where, coming from a think tank perspective, we are a bit different to the banking industry to a certain
Right.
extent, is that we are a securitized lender. So what that effectively means is we are driven by the security, not the purpose. So if in this instance when you said someone's got a property and they want to buy another property,
Yep.
the second property could be a commercial property. So they've got a residential owner-occupied home,
Yep.
they've paid it down, there's a bit of equity, they want to leverage that equity and buy a commercial property for their mechanic trading business.
Oh.
What we would do is we would gear up that like the resi property owner-occupied rates, irrespective of the purpose is to buy commercial, and then lend the rest against the commercial. So sometimes it's a very different kind of a play, and we don't like
did
to
that
cross.
deal at a major because the purpose was
Everything's
business.
crossed.
You land in business bank world,
Yeah.
your interest rate would be impacted. So
Yeah.
it's much simpler the way we do it.
So it's a wonderful tool to have a business, have a self-employed applicant grow his business.
Oh, yes,
Because
yes.
buying your first place of business is always very hard.
You do it within your SMSF as well.
Yeah, we
So
do it
like
within the SMSF as well. So, and the same thing. So, so you can gear up against your owner-occupied property, for example.
Yeah.
And because we understand the super space, we've been there for 17 years. We would actually let you cash out against an owner-occupied property, and utilize to buy a commercial SMSF or resi SMSF.
Yeah, so SMSF is again, it has been tracking along, but now over the last probably 18-20 months, everyone is just talking about SMSF and looking for options. So how does Thinktank placed with SMSF?
Very good question, Girish, because we see a lot of the complicated stuff. We do a lot of the complex stuff.
Yeah.
I think we do it pretty well. We understand and we've been in that space. So effectively, it's SMSF, as Matt would say, is the flavor of the month, especially resi SMSF. To give you an idea, last financial year we wrote about 35% of our overall volumes was SMSF.
Okay.
Right now we're tracking at 65% of our volumes being SMSF, and that's all across. So it's taken a massive jump. It's all about rolling your super from your industry funds to a self-managed, as the word says, self-managed. So they self-manage it, and effectively you can buy property through it. So that's the whole kind of basic concept.
Yep.
It's a very regulated space. This is the only lending that is monitored by the ATO directly.
Right.
But what that also means is it's very black and white. So to look at an SMSF transaction is very easy.
The only things I'd add, Dev, and this is potentially for some clients out there who either have an SMSF in place, we are doing a lot of refis from the major banks. So I
Yep.
worked at Westpac once upon a time, and we pulled out of the product, I'd say, in late 2018, around then. So all the majors now have stopped playing in SMSF for various reasons around their compliance and cost of funds and that sort of stuff. It's very much alive in the non-bank space. So if you have an SMSF loan in place, I would ask your accountant, ask your broker, whoever helped you set it up, what interest rate you're currently on, because we're finding SMSF loans on 10% at low LVRs that we can refinance onto a rate in the 7s. So that makes a big difference to your cash flow in your fund. So make sure.
Also, there is a bit of a myth about SMSF that it can't be refinanced. The loan term can't be extended. All of things are not correct. So I would always say engage with your broker or with the financial planner and accountants, because there is a lot of scope in that industry.
The only other niche, the final thing on SMSF, Girish, I think, is how we look at servicing. We're very flexible with what we can include. So
Yeah.
all our products are targeted at self-employed. Self-employed people don't often pay themselves super that well.
Yes.
We know the space very well, so
Yeah.
we'll accept concessional, non-concessional, and even future or projected contributions
Yeah.
to allow self-employed people to service debt in this.
Yeah, wonderful. Like anything, borrowing under SMSF, you would require an accountant and a financial advisor to
Yeah.
give you that go ahead. But once you've got all those things in place, we certainly have solutions for you.
Yeah. Yeah. And also, we see a lot of the complex stuff, as I was saying before. So, SMSF set up in tenants in common structure,
Right.
unit trusts, those kind of, or in specie where they're selling a commercial property to their SMSF. Those kind of stuff we do as well, which a lot of our competitors done. So,
Yeah. No, look, we've been working with Thinktank. I think last few years it's been just an upward graph. Thank you for the support, and just for our general viewers, if there's a solution that you're looking for, or maybe it's a refinance, definitely reach out. The links are all below, and we'll hope to chat with you soon again.
Thanks for joining.
thank you very much, Girish, and
Yeah.
thank you for the opportunity.
Right.
Thank you.
Thanks all.